With all the noise in markets, it's hard to find strong signal, let alone signal that lasts. If you're looking for this kind of quality signal, then we have the right company for you. We present Globe Telecom, and we, Team Poseidon, have a buy rating on Globe at a price target of 2,400 pesos. Because of one, its recovery and long-term prospects in mobile, two, its ability to capitalize on the robust growth potential of broadband, and three, its strong position to benefit from long-term drivers. At 5 times EV/EBITDA, we think Globe is inexpensive, even as we forecast the company to deliver an 8% EBITDA CAGR. Globe is one of two major telcos in the Philippines. It operates an end-to-end network with a formidable presence in the last mile. Globe has established itself as a digital lifestyle leader, leading innovation within and beyond the telco space. On top of this, Globe has a strong commitment to ESG with a solid management team committed to responding to environmental and social causes. Amid the COVID-19 pandemic and the worst recession in recorded history, Philippine telcos were a rare bright spot. While consumption declined, communication spending was resilient as demand for digital rose. We believe that Globe not only benefits from the sector's resilience, but will capitalize on new growth drivers post-pandemic.
Now, starting with their first point, we expect Globe, with its leadership in mobile, to stage a recovery and to benefit from long-term themes. Globe has established a strong market position in mobile, leading the industry with consumer-centric and innovative products such as GoSurf, Surf for All, and My Super Plan. Case in point, Globe was able to grow its market share from just 38% in 2011 to 52% in 2020, even with a smaller network. Now, mobile revenues came in weaker for Globe in 2020, down by 7%, as the pandemic led to a decline in out-of-home usage. But as quarantine restrictions ease and mobility improves, we expect mobile demand to recover as it did sequentially in the last 2 quarters. On top of recovery, we see opportunity in the mobile space. While the Philippines has above average mobile penetration, average data consumption stands at just 3 gigabytes per month, a third of the regional average, implying significant room to increase ARPU. To capitalize, Globe is taking steps to beef up its network. To expand last mile coverage, it plans to add 2,000 cell sites this year, on top of the 1,300 it built in 2020. It's also upgrading almost 25 million 2G and 3G subscribers to LTE, likely translating to higher data spend. With its leadership in mobile, strong digital ecosystem, and proactive network improvements, we expect Globe's mobile revenues to recover by 4% in 2021 and grow by 5% CAGR in the next 3 years.
Now, opportunities exist in mobile, but the clear winner amid the pandemic is definitely broadband, which brings us to our second point. Prior to COVID-19, a significant growth opportunity already existed for broadband, with penetration rates at just 14%, well below that of regional peers. As a result of the pandemic, we saw accelerated demand for new use cases such as conferencing and remote work. Because of prolonged quarantine and likely delays in vaccine rollout, we believe the use cases that emerged during the pandemic will become structural and permanent. That is, work from home and video calls are here to stay, and demand for broadband will be sustained. Enforcing these promising growth dynamics is a large underserved market of households that can afford entry-level broadband. Now Globe is the market leader in fixed wireless, but is only the third largest player in fixed line. This year, Globe has committed $300 million to aggressively roll out 1 million broadband lines and catch up to PLDT and converge in the fixed line space. Globe is also releasing innovative products like Globe at Home Only to better cater to customers. What's encouraging is less than 50% of Globe's fixed line subscribers are on fiber, suggesting a large base of subscribers to upgrade. At the same time, Globe has a sizable base of fixed wireless and postpaid subscribers it can upsell and cross-sell to fiber. We expect Globe's aggressive campaign to allow it to capitalize on the robust growth of the segment, driving a 20% CAGR in home broadband revenues.
On to our third point, we forecast Globe to deliver an 8% CAGR in EBITDA and 6% CAGR in core earnings on the back of healthy growth in service revenues and stable EBITDA margin. We expect revenue growth to be driven mainly by broadband. For costs, while promos may be higher this year, we expect Globe's cost-cutting initiatives to allow them to sustain margins. Over the long term, we like Globe's positioning to benefit from key drivers. The first, mobile wallets. Mobile payments saw as much as 1,000% growth in transactions in 2020. Globe's affiliate Mint leads the domestic mobile payments industry in user and growth transaction value. In the medium term, Globe can realize a significant monetization opportunity from Mint, which rides the momentum of accelerated industry growth. Second, tower sharing. We expect Globe to benefit from the common tower policy, which in the long term will free up capex from passive telco infrastructure. And finally, 5G. 5G is expected to be an industry game changer, cutting across multiple segments. In mobile, 5G could increase ARPU by as much as 20%. In broadband, 5G could make FWA speeds comparable to fiber. 5G is expected to drive new revenue streams like IoT and smart devices, which can create synergies for enterprise. We expect Globe to be at the forefront of the 5G race in the Philippines, given its historical leadership in wireless, first mover advantage, and digitally oriented verticals. Now, even if we don't factor these into our base case, these drivers provide major sources of upside risk for Globe.
Moving on to valuation, we valued Globe using DCF, which we think best captures the growth drivers of the mobile and home broadband segments. For our DCF, we used a WACC of 8.3% and a terminal growth of 2.5%. Our WACC is based on a risk-free rate of 4% and a beta of 0.9, while our terminal growth is based on subscriber growth in developed markets. At current levels, Globe trades at just 5 times EV/EBITDA, well below domestic and regional peers despite faster growth and a higher ROE. Globe's 5% dividend yield is also higher than the Treasury yield and index dividend yield. Looking at its 10-year bands, we see that Globe trades below its historical mean, even as our forecasted EBITDA CAGR is similar to Globe's historical growth.
Now, our valuation comes with downside risks, with the top three being a slow recovery in mobile, execution risk, and competition. We think that Globe's strong consumer orientation and track record of successful expansion mitigate the first two. On competition, there will always be competition from the other incumbent PLDT, but we expect this to be rational. What has really been negatively priced in by the market, however, is DITO's entry. Since DITO was announced as the third telco in November 2018, Globe has traded at a lower multiple. Case studies show that the disruption of new entrants can be high, moderate, or limited. We think that the market is pricing in a moderately disruptive scenario. But we believe that DITO will have limited disruption, similar to Vietnam Mobile and Telkom SA. Looking at DITO's network, we see no backbone, cell sites at a fifth of what Globe has, and a limited distribution network. Coupling this with DITO's higher spectrum bands that are more demanding in terms of cell sites and its plan of metro-only rollout, we expect DITO to have limited coverage as an operator, reducing possible competitive pressures. On the flip side, key upside risks are earlier adoption of 5G, faster monetization of Mint, and more traction in tower sharing. With risks to the upside and the downside, we think that it's fair that our implied EV/EBITDA is in line with the Globe's 10-year average of 6 times.
Rounding out Globe's sound fundamentals and attractive valuation is its firm commitment to ESG. Core to its ESG thrust is CEO Ernest Wu's belief that Globe is more than a telco. Globe, backed by its experienced management team, has made strides in reducing emissions, promoting workplace diversity, and responding to the pandemic. It also bests its peers in Bloomberg's and MSCI's ESG scorecards. Worth pointing out is how telcos with higher ESG ratings trade at higher multiples. Summing it all up, we like the stock because of one, its recovery and long-term prospects in mobile, two, its ability to capitalize on the robust growth potential of broadband, and three, its strong position to benefit from long-term drivers. We reiterate our buy rating on Globe where the signal is strong. Thank you, and we are now ready for questions.